Okay, so now let's solve some questions relating to interest on capital. Okay, so before that, let's try to understand in detail what is interest on capital. Okay, so what are the adjustments which we have to do on interest on capital? So you may write interest on capital is generally allowed on the opening balance. Opening balance of capital. Sometimes adjustments for additional capital is also required. If we have been given closing balance, of capital, we shall have to ascertain opening balance of capital for the calculation of interest on capital. Now see, it is simple. Okay, so for example, let's do timeline. This is 1st Jan and this is 31st March. Okay, let's say 2023, 31st December 2023 and 31st December 2023. Now you'll have the balance of capital at this point. Okay, now interest will be calculated at the end of the year. Okay, calculated at the end of the year. Okay, interest will be calculated at the end of the year. Now for this we'll have to ascertain the capital at the beginning of the year. Okay, so no interest will be provided during this period. Okay, no interest will be provided. Interest will be calculated at the end of the year. Okay, now if the question has given us closing balance of capital, okay, with this closing balance and other information, we'll have to find the opening balance. Okay, then we'll be able to calculate interest on capital. See, it is written here. Interest on capital is generally allowed on the opening balance of capital. Okay, you have to remember this. Interest on capital is allowed on opening balance of capital. Okay, sometimes adjustment for additional capital is also required. Okay, if we have given closing balance of capital, we shall have to ascertain the opening balance of capital for the calculation of interest on capital. Okay, so now let's solve an example relating to this. Let's solve an example. From the following information, calculate interest on capital of Mr. C, a partner, for the year ended 31st/3/2022. Okay, so additional information given is C's capital on 31st/3/2022 is rupees 12 lakh. Okay, rupees 12 lakh. See, this is the closing capital. Okay, 31st December. Profits of C during the year is how much? Rupees 3 lakhs. Okay, drawings during the year is equal to rupees 1 lakh. Fourth point is additional capital introduced during the year. Additional capital introduced, date is given. additional capital introduced on 1st of October 2021 is rupees 5 lakhs. Okay, and rate of interest is 12% per annum. Okay, now this is an example. Okay, this is an example. We have to solve this. Okay, now before moving with the question, okay, let me just explain you how capital account entries in the capital account will be treated. Okay, now in the previous video we have talked about profit and loss appropriation account, right? We have discussed about P&L appropriation account. Now this P&L appropriation account will be prepared at the year end. Okay, so for example 31st, in our example it is 31st/3/2022. Okay, now this P&L appropriation account is prepared from the point of view of firm, from the point of view of the partnership firm. Okay, now see, interest on capital, we have calculated interest on, we have seen interest on capital, right? Now interest on capital is a gain for the partner, because partner has introduced capital into the business and he's getting capital for that. Okay, now it is a gain for the partner, but it is a loss for the partnership firm. Okay, we have discussed this earlier. Similarly, interest on drawings, this is a what? Loss for the partner, because he has been charged interest on the amount which he has withdrawn from the business. Okay, and this is a gain for the partnership firm. Okay, salaries, if we talk about salary, gain for the partner and loss for the partnership firm. Okay, now if you talk about drawings, what is a drawing? What is a drawing? Capital withdrawn, or you can say cash withdrawn by the partner for personal use. Now with this drawings, what will happen? Okay, see, the partner has introduced cash into the business, into the partnership firm. Okay, now out of this capital which he has introduced as cash, he is what? Withdrawing some amount, okay, as drawings. Okay, so what will happen with this transaction? The capital account of the partner will be reduced, obviously. Say for example, he has introduced 1 lakh as his capital. Okay, and out of this he has withdrawn 5,000 rupees. Okay, so what is the balance of the capital? 95,000 is the balance. Okay, now I hope this is clear to you. Okay, interest on capital is a gain for the partner, because he will be getting interest on the capital introduced, and it is a loss for the partner, because for the partnership firm, because partnership firm is giving interest to the partner. Okay, likewise drawing is a loss for the partner, because interest on drawings is charged to the partner. Okay, and it is a gain for the partnership firm. Salary is gain for the partner and is loss for the partnership firm. Drawing, what is drawing? Cash withdrawn by the partner for personal use. Okay, now let's try to understand capital account. Okay, let's try to understand capital account. Okay, now see, what is this capital account? A partner has introduced capital into the business. Okay, he has introduced capital into the business. Okay, now what will happen when the business will come to an end? This capital will be paid back to the partner. Okay, so can I say that the capital which the partner has introduced into the partnership firm is a liability? It's a liability for the partnership firm. Okay, it's a kind of liability. Okay, we cannot say exact liability, but it's a kind of liability for the partnership firm. Okay, it will be always shown in the liability side of the balance sheet. Okay, in class 11 I hope you have solved the accounting equation which says capital plus liability is equal to assets. Okay, in class 11 you have solved this chapter. There is a chapter, okay, accounting equation, where you have seen capital plus liability is equal to assets. Okay, so with this we will know that capital will always have what? Credit balance. Okay, capital will always have credit balance. Assets will have debit balance. Okay, increase in assets will be written in the debit side, and liabilities, okay, increase in liability will be written at the credit side, will be written at this side. Okay, so similarly all the increase in the partner's capital account will be written in the credit side, all the items which reduces the capital of the partner will be written in the debit side. Okay, I hope this is clear to you. Let me repeat it again. All the items which will increase the capital balance of the partner's capital account, it will be written in the credit side. All the items which will reduce the balance of capital will be written in the debit side. Okay, I hope this is clear to you. Now see, what are the items of PL capital account? Okay, say for example, you have introduced fresh capital of rupees 1 lakh. You have introduced fresh capital of rupees 1 lakh. What will be the journal entry? The journal entry will be cash account debit to capital account. Okay, this will be the journal entry. So you will have here by cash account. Okay, capital introduced. Now a partner is getting interest. A partner is getting interest on capital. So it is a gain for the partner, right? The balance of the partnership firm will, so the balance of the capital account will increase. Okay, so we will write it in the credit side, interest on capital. Okay, and when a partner gets salary, okay, partner is getting salary, it is a gain for the partner, it is a loss for the partnership firm. Okay, so partner's capital account will be increased, right? It is a gain for the partner, so we will write it at the credit side. Now if a partner is getting any profit from the business, okay, profit is a gain for the partner. Okay, so it will be written on the credit side of the partner's capital account. Okay, by P&L appropriation account. Okay, I hope this is clear to you. Now let's talk about the debit side. Now when you do any drawings, okay, drawings will reduce the capital balance, so it will be written in the debit side. Okay, because we know the rules of liabilities. Okay, in the basic concept we have discussed that increase in liability will be credited and decrease in liability will be debited. Okay, so drawings will be given here. Okay, and to interest on drawings will be written at the debit side because it is the capital balance will be reduced. Okay, so now we will find out the balance. So the balance will be called as balance CD, balance carried down. Okay, so now this balance at the next year it will be our balance PD. Okay, so this proves the rule of real account, right? We know that nominal account we have discussed, right? Nominal account, the balance will be transferred to other account, but in case of real account, this is a real account, so the balance will not be transferred to any other account. It will have balance BD, it will be brought down in the next year. Okay, so I hope this capital account is clear to you. Okay, so now let's come back to the question which we have written here. Okay, which we have written here. Let me just copy this. So now let's solve this question. Okay, let's solve this question. What is the question saying? From the following information, calculate interest on capital. The main requirement is calculation of interest on capital. Okay, of Mr. C, a partner for the year ended 31st March 2022. Okay, so the interest, the capital balance of the partner at the year end is 12 lakhs. Profits during the year is 3 lakhs. Drawings during the year is 1 lakh. Additional capital introduced is 5 lakhs and rate of interest is 12%. Okay, so now let's calculate interest on capital. Okay, now we'll have to calculate solution, calculation of interest on capital. Okay, now I will tell you two ways how you can calculate. Okay, so the better way you understand, you can apply that formula. Okay, now see, we have to calculate interest on capital and we know the rule. I have written down here that, what was the rule? Interest on capital is generally allowed on the opening balance of capital. Okay, it will be allowed on the opening balance of capital. So for example, at this point we have introduced capital. Okay, and at this point we have introduced additional capital. Okay, so now the capital which we have introduced at the beginning of the year or the opening balance of the capital, the interest will be allowed for the whole period. That is for 12 months. But the capital which we have introduced at this point, we will allow interest for this period only. Okay, for this period only. Simple. The capital balance, the opening balance or the initial capital which we have introduced, the interest on capital will be allowed for the whole period, for the whole year, but the additional period will be allowed only for the months, okay, from which additional capital has been introduced. Okay, I hope this is clear. So now let's solve this. Okay, so for this I will prepare capital account. Okay, I will prepare capital account of Mr. What was the name? Mr. C. Mr. C. Okay, I will prepare capital account of Mr. C. Debit and credit. Okay, all the increases in the capital will be written at the credit side, and whatever items that reduces the capital balance will be written on the debit side. Okay, so now let's start with the closing balance. See, the closing balance is 12 lakhs. The first item is closing balance is 12 lakhs. Okay, so closing balance simply means to balance CD 12 lakhs. Okay, we have to solve the question according to the information. Okay, profits during the year. See, profit will increase the capital balance, so it will be written at the credit side by P&L appropriation account. What is the amount? 3 lakhs. Next, we have done with this. Now, drawings during the year is 1 lakh. Okay, so drawings will basically reduce the balance of the capital account, so it will be written on the debit side. Drawings, how much? 1 lakh. Okay, clear? Now, additional capital introduced during the year. Additional capital introduced on 1/10/2021. Okay, so on 1/10/21 we have introduced additional capital. Okay, so cash, what will be the entry? Cash to capital. Okay, so cash account, this will be additional capital. What's the amount? 5 lakhs. Okay, so additional capital will increase the capital balance now, so we have written on the credit side. Okay, now rate of interest is 12%. Now we are done with the information given in the question. Okay, so now how will we calculate the opening balance? See, how will we calculate the opening balance? What is the total of the debit side? 13 lakhs. 13 lakhs. Okay, so basically both the side, debit credit side should be same. So can I write 8 lakhs here? No, I cannot write 8 lakhs. Why? Because both the debit and credit side should be same. Okay, so I'll have to write 13 lakhs only. Now see, there is a difference of 5 lakhs. Okay, 13 minus 8 is 5. There is a difference of 5 lakhs. So what is this difference? This is the opening balance. Okay, by balance BD. So this is the opening balance. So basically we had to calculate this. Okay, so this is how you will find out your opening balance. Okay, now let's calculate interest on capital. Calculation of interest on capital. Okay, so we'll calculate interest on capital. First of all, on opening balance, what will be the amount? 5 lakhs. What is the rate? The rate is 12%. See, the opening balance is 12 lakh, 5 lakhs. So interest will be calculated on 5 lakhs and 12% is the rate. Okay, so this basically will be calculated for the whole year because it is the opening balance. Okay, so you will calculate opening balance of this, and this is the closing, this is the year end. Okay, so basically we will calculate interest for the whole year. Okay, which is 12 months. Simple. So what will be the amount? 60,000. The amount is 60,000. Okay, now see, you have calculated interest on the opening balance. Now additional capital has been introduced now, so we'll give interest, the partner will get interest on this also. So the capital which is introduced on 1/10/21. Okay, additional capital, what will be the interest amount? 5 lakhs. The rate is 12%. The rate is 12% into 12% into, now see, when has he introduced the capital? On 1/10. Okay, 1/10. So he will get interest for how many months? If I calculate 10, October, November, December, Jan, Feb and March. Okay, so it is for how much? 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 8. October, November, December, January, February, March. 6 months. Okay, so he will basically get interest for 6 months. Why 6 months? Because see, he has introduced capital on additional capital on October, right? And the year end is on 31st March. So we will get 6 months. So we'll have to calculate it for 6 months. Okay, so basically the firm has used his money for 6 months during the year. So we will get how much? we will get 30,000. Okay, so what is the amount of interest on capital? 90,000. This is the final amount. This is the final answer. Okay, I hope this is clear. This is one way. So the alternate way, how will we calculate? Alternative way. Okay, so we have to anyhow find opening balance. Okay, so how we can do? Capital at the end of the year. What is the capital at the end of the year? See, it is 5 lakhs. 5 lakhs. Add drawings. Sorry, it's not 5 lakhs. It's 12 lakhs. It is 12 lakhs. Add drawings during the year. What is the drawing amount? 1 lakh. Less. What will be less? We will less additional capital and profits. Additional capital less profits. What is the additional capital? 5 lakhs and 3 lakhs. Okay, 5 lakhs and 3 lakhs. So see, 5 plus 3 is 13, minus 8 is 5 lakhs. Okay, you find your opening capital. Okay, now interest will be calculated on opening capital and the additional capital. Okay, so this you can do it either ways. Okay, see what I have done here. See, closing capital at the end and drawing during the year. Okay, so I have added the debit, I have added these two. Okay, and I have less this two. Simple. Okay, this way, because we have to find the balance BD. The balance is in the credit side, so we'll have to add these two first, then we have to reduce this, and the balance will be our opening balance. Okay, so you can do it either ways, it's your choice, but I personally prefer students to do it this way. Okay, to prepare partners, you prepare capital account and you find the balance BD, because it's very easy to understand the format and solve it. Okay, you may do some mistakes when you go through this way. Okay, you can do this way when the picture of the capital account is set in your mind. Okay, for practice you can do it this way, and if you want in the exams you can do it this way. Okay, that's your choice. No, your marks will not be deducted for this. Okay, so I hope this is clear to you. Okay, so now let's move to our main question. Okay students, so now let's solve question number 7. Okay, page number 53. So let's read the question first. From the following information, from the following balance sheet of X and Y, calculate interest on capital at the rate 5% per annum payable to Y for the year ending 31st December 2013. So we'll have to calculate interest on capital at the rate 5% payable to Y. Oh, okay, there are two partners X and Y, but question has asked us only to calculate interest on capital payable to Y. Okay, now during the year Y had drawings of rupees 15,000 and profits during the year were 30,000. Okay, drawing has been given to us, the amount of drawing has been given to us. Okay, and profit during the year has been given to us 30,000. Okay, so in your question the question is not correct. Okay, in your question it is sorry, it's correct. Yeah, 2013 only. Okay, now there is a balance sheet. Okay, X capital is given, Y capital is given, P&L account is given, and your sundry debtors is given. Okay, so now let's solve this question. Okay, solution. We know that interest on partners capital is generally allowed on the opening balance of capital. Okay, so we have to calculate opening balance of Y's capital. See, the question has given us information related to 31st December. Okay, so basically this balance sheet is for 31st December 2013. Okay, and closing balance have been given 40,000. Okay, but we know that interest on capital will always be calculated on the opening balance. Okay, opening balance of capital. So now we'll have to calculate opening balance of capital. Okay, we'll have to calculate opening balance of capital. So for this we will prepare P&L. We'll prepare partners capital account. Okay, so wise capital account. We'll prepare wise capital account. Wise capital account. Debit side and credit side. Okay, particulars, amount, particulars and amount. Okay, now see, the balance sheet has given us the closing balance. This balance sheet is for 31st December. Okay, so we have the closing balance 40,000, sorry. Okay, so the closing balance is 40,000. To balance CD is 40,000. Okay, what else we are given? We are given drawings. See, drawings of 15,000 during the year. Okay, nothing has been mentioned about the interest on drawings, so we will not calculate interest on drawings. Okay, so drawings also will come here to drawings, because drawings will reduce the balance of the capital account. Okay, so what is the drawing amount? 15,000. Okay, 15,000. Are we given any other information? And profits during 2013 were 30,000. Okay, profits during 2013 were 30,000. Okay, and you can see that there is one more figure of profit in the balance sheet. Okay, so now one thing you have to understand is, okay, what you have to understand is the balance of this balance sheet, the P&L balance of which is given in the balance sheet. Okay, what is this balance? Is this the profit which we have earned during the year? No, right? Because the profit which we have earned during the year is 30,000. It is 30,000. See what happens. Okay, profits during the year is 30,000. Now see what will happen. Okay, the business has earned profit of 30,000 during the year. Okay, now what can the firm do? Out of this 30,000, okay, the firm can distribute the whole amount, full amount. Okay, distribute full amount. Okay, or the firm has an option of distributing some profit and retaining the balance profit. Now, why do firms retain profits? Simply because of the capital requirements. Say for example, the firm is in need of some money. Okay, for the firm is in need of some funds. Okay, now if the business has its own funds, okay, some profits which the business had retained, okay, which he had earned during the year, they will not have to go for the loan, okay, or take funds from outside source, okay, because they will have the profits with them, the retained profits with them. Okay, so this is the reason why the firm will not distribute the whole profit which they have earned during the year. So what has happened in this question? See, they have earned during the year, they have earned the profit of 30,000. Okay, so out of this profit they have retained how much? See, the balance, the profit and loss figure, okay, the P&L figure of the balance sheet, this is the retained profit. Okay, this is the retained profit. Retained profit simply means the business has not distributed this profit to the partners. Okay, see, it is in the liability side. Which simply means these profits, okay, it is to be distributed to the partners in the future. Okay, so basically this is the retained profit. Okay, now see, the retained profit is 20,000. The firm has earned profit of 30,000, and out of 30,000 the firm has retained 20,000. Okay, so what is the amount of distributed profit? What is the amount of distributed profit? 10,000. Okay, they have earned 30,000. Out of 30,000 they have retained 20,000. Okay, they have not distributed 30,000, and the remaining 10,000 they have distributed between the partners. Now there are two partners, X and Y. Okay, see, the question has not mentioned anything about the profit sharing ratio. Okay, so this profit will be distributed between X and Y in the equal ratio. Okay, it will be distributed equally. So X will get 10,000, X will get 5,000 out of 10,000, and Y will get 5,000 out of 10,000. So the question requirement is to calculate interest for Y only. Okay, so we will calculate, we will need only this figure. We will need only this figure for y. Okay, now see, y has got a profit of 5,000. So where will the profit amount be written? In the credit side. Okay, by P&L appropriation account. So what is the amount? 5,000. Okay, what is the amount? 5,000. 5,000. Okay, anything else mentioned in the question? No, we don't have to do anything with this. Okay, we don't have to do anything with this, and we have made the treatment for capital and profits. Okay, now what is the total of the debit side? The total of the debit side is 55,000. Okay, total of the debit side is 50,000. So credit side will also be 15,000, but there is a difference of 50,000. So what will be the difference of 50,000? It will be the opening balance by balance BD. Okay, so the first requirement was to calculate opening balance. So we have calculated the opening balance. Okay, now we will calculate interest on capital. Okay, so it's simple now. Calculation of Y's interest on capital. Okay, what was the opening balance? 15,000 into what was the rate? The rate was 5% per annum. Okay, so the rate is 5%, or you can write, for those who don't understand this, you can write 5 divided by 100%. Simply means 100, right? So you can write it this way. So what will be the amount? 50,000 into 5% will be 2,500. So the amount of interest will be 2,500. This is our final answer. Okay, this is our final answer. This is our final answer. Okay, now if you don't want to calculate it this way, okay, if you don't want to calculate it this way, we'll calculate it alternative way. Okay, opening balance. So alternative way to calculate opening balance. Okay, how will you calculate? See, you will add these two, closing balance and the drawings. Okay, so what is the closing balance? Closing balance of capital. The closing balance of capital is 40,000. Okay, and you will add drawings. Add drawings during the year. What was the amount of drawing? 15,000. Okay, and out of this you will have to less the profits already credited. Okay, less profits already credited is how much? 5,000. How did we calculate this? 30,000 was the profit earned. Out of 30,000, 20,000 has been retained. So it is assumed that 10,000 has been distributed between the partners. So one partner will get 5,000. Okay, so now what is the value of opening capital? 40 plus 15, 55 minus 5 is 50,000. Okay, so you can calculate it this way. So this is our, we have completed question number 7. Okay, I hope you have understood this. Very easy and simple. Okay, if you do it logically.